The week began on a dismal note at the markets as earnings disappointment by index heavyweights Infosys and HDFC Bank triggered a sell-off in IT and financial stocks. A spike in WPI-based inflation to 14.55% in March also weighed on the investor sentiment. At close, the BSE Sensex and the NSE Nifty 50 declined 2% and 1.7% respectively. The Nifty IT tumbled 4.6% and the Bank Nifty shed 2%. The HDFC duo, that is HDFC and HDFC Bank, along with Infosys, accounted for more than 70% of the day's losses on the S&P BSE Sensex. Infosys registered its biggest intraday fall in 2 years as it tumbled over 9%. The stock eventually ended 7.3% lower at 1,621 rupees. Other major losers were HDFC, HDFC Bank, Tech Mahindra and TCS, down in the range of 3.7% to 4.8% on Monday. According to Naveen Kulkarni of Axis Securities, the markets will continue to witness volatility in FY23, especially in the first half of the year with rising interest rates globally and high inflation expected to persist. In this scenario, he expects money to move from long-duration debt funds to equity funds in the second half of the year. Kulkarni is positive on metals, hospitals, hospitality, oil refining, and capital goods sectors, but believes discretionary consumption, IT, and BFCs may underperform. Given the fall in indices wherein the NSE Nifty has shed nearly 6% in just 8 trading sessions from its recent high of 18,115. The next major question on investors' mind is that will the indices decline further or shall we see a reversal? To get an answer to that query, we have with us Avadhoot Parker of Business Standard for the technical outlook on the market.
The benchmark indices, BSE Sensex and Nifty 50 violated the 200 days moving average with a strong gap down on Monday, indicating weakness and a cautious outlook. The 200 DMA for Sensex comes to 57,515 and for Nifty it is 17,160 levels. The current trend seems uneasy. However, when looked at from a bigger perspective, one could easily see breakout for the Sensex was at 55,500 and for Nifty it was at 16,500 levels. So one could easily see, or one could say, this current weakness or current correction could be an opportunity, considering 55,500 and 16,500 to be the breakout mark for a long-term perspective. In terms of Nifty Bank, it did violate 200 days moving average, which was placed at 36,800 levels, and this index, Bank Nifty, is also indicating weakness. However, there is a gap up closing which was at 36,000 mark. So as long as Nifty Bank trades above 36,000 level, one could see this index regaining the bullish sentiments. For Bank Nifty, especially for the Bank Nifty, 38,000 remains the breakout mark.
That apart, on Tuesday, shares of ACC, L&T Infotech, Mastech and Tata Steel Long Products are likely to be in focus as the companies are scheduled to announce Q4 earnings. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.